Well, good morning, everyone. This course is the investment and portfolio management. The topic of this week is investing in alternative investment. There are two subtopics that are first one, alternative investment, and the second one is digital investment. In terms of the learning objective, firstly, I expect you have the idea that what are alternative investment. The second learning objective is that I expect students can explain the characteristic of alternative investment. The third learning objective is that I expect students have the idea, the advantages and disadvantages of the investment in alternative investment. And the last one, the fourth learning objective is that I expect students can explore investing in alternative investment. Because of the learning objective, I then would love to share you these topics about alternative investment. That is the alternative investment, characteristic of alternative investment, as well advantages and disadvantages of investing in alternative investment. I also provide you the example of alternative investment as well. I will introduce you how to invest in alternative investment. The first topic here, that is what is alternative investment. On the slide number 6, what is alternative investment? Here you are on the slide number 6. The key concepts of alternative instrument or alternative investment is any investment that are not the traditional investment type. What are the traditional investment type? You probably have the questions. The traditional investment, that is, for example, might be cash, short-term money market instruments, bond, and stock equity. The characteristic of here, the alternative investment is any asset that are not easily sold or convert into cash. The keyword that is cash. We call the alternative investment here like a illiquid asset. For the second content that I would like to introduce you, right? The that what are the characteristics of the alternative investment here? The alternative investment cover a wide range of assets and strategies. The key characteristic of alternative investment are, for example, low correlation to traditional investment like bond and stock. As well as the alternative investment tentatively provide higher return comparing with the traditional investment. However, the alternative investment provide less liquidity than the traditional investment, as I mentioned in the previous slide, that is the illiquid asset. However, like some alternative investment cannot be traded on a daily basis, that is the meaning of the illiquid assets. Normally, investing in the alternative investment need to hold this kind of the investment for longer investment time horizons comparing with the traditional investment. And you need to invest with a higher, right, with a higher minimum of the investment. The alternative investment normally contain the complex investment structure. Because of the above characteristics of the alternative investment that I already mentioned here, the investor then expect higher return. So this is the concept of the correlation as the main characteristic of the alternative investment that has the low correlation to traditional investment. You may have some question that what is correlation, right? So here, correlation is an indicator which explains the linear relationship between two assets. In the investment area, the correlation refer to like how the return of two assets, that is the asset A and the asset B. The correlation refer to how the return of two assets move, right? Move in the relation to each other over the time. The relations of the return of two investments might be move together or move in the opposite direction or move independently. For example, the return of the asset A, such as the government bond, and the asset B, such as the stock equity of the Siam Cement stock. That is like a trade in the stock exchange of Thailand, that is the SET, right? How we, right, in this part on this slide, I will introduce you that how we apply the concept, right, the concept of the correlation in the investment area. In the first case, right, in the first case, you notice here in the first case that correlation, right, correlation greater than zero indicate a positive relationship, right? It means positive correlation such as like a 0.3, 0.5, or 0.7. I mean that positive 0.3, positive 0.5, positive 0.7. In this case, for example, when the return of the asset B, in the return of the asset A increased 1%, asset B will increase 0.3% in the case that correlation of these two assets, right, is positive 0.3. In the second case, please notice the second one, that is the correlation less than zero, signify a negative relationship. For example, minus 0.1, minus 0.5, or minus 0.7. In the second case, that is the negative correlationship, refer to when asset A increased 1%, but the return of asset B will decrease 0.7%. In this case, if the correlation of these two assets is the minus 0.0. For the last case, right? For the last case, in the third case, correlation of two assets is zero. What does this mean? This means when the return of asset A, for example, increased 1%, the return of asset B may increase or decrease in some certain percent. So it means that the correlation, right, is the independent tree. On the slide number 11, on this slide, show you the correlation of positive 1%, positive 0.9, positive 0.5, 0, minus 0.5, minus 0.9, and minus 1. How to apply the concept of the correlation to construct the portfolio model. Positive relationship, you should construct the portfolio model with the positive relationship of your financial asset in your portfolio, or should you construct the portfolio with the negative relationship? Which one you prefer? So here you will get the answer, right? You will get the answer that for applying the correlationship to construct your portfolio model, the key concept of the portfolio diversification theory, right? As the late highlight, that is the negative correlation is the best for risk reductions. Again, I repeat again that a negative correlation or inverse correlation is a key concept in the creation of diversified portfolio that can better reduce portfolio volatility. On the slide number 14, right, on this slide, I provide you the comparisons between traditional investment and the alternative investment. In terms of the alternative investment, right, the alternative investment are not publicly traded. Please notice the slide on your right hand side, that is the alternative investment, that is the not publicly traded. They can, right? The alternative investment. This make the alternative investment less liquid than traditional investment and harder to convert. It mean that it's more difficult to convert into the cash quickly. They can be exceptionally complex and typical, not heavily regulated. Because the alternative investments are not heavily regulated, there are often less transparency allow this type of the investment. Then the alternative investment are considered riskier than traditional investment. I repeat again that the alternative investment are considered are riskier than traditional investment. Because of that liquidity, the alternative investment typically have longer investment timeline than traditional investment. In terms of the advantage of investing in the alternative investment, you should what should be benefit on investing in the alternative investment. First one, the portfolio diversification. Alternative investment typically have a low correlation with those traditional asset classes. These low correlations mean alternative investment often move differently from the stock and bond market. This feature, the feature that is the for the portfolio diversification, and because of the low correlation of the alternative investment with the traditional investment, this feature makes alternative investment a suitable tool for portfolio diversification in order to construct your portfolio model. The second advantage of investing in the alternative investment, as the second bullet point, that is the natural hedge. What is natural hedge, right? Investing in the alternative investment tentatively enhance return to the portfolio by investment by invest in the gold, right? Because the investing in the gold also provide an effective hedge against inflation, which hurt the purchasing power of the money. For the third one, that is the return enhanced, right? Return enhancement. It means that enhance the return. Investing in alternative investment tentative enhance the return of the portfolio model. Last one, investing in the alternative investment for the purpose that is the risk management can reduce the correlation with the traditional asset. However, even you notice that even you are informed that there are plenty of the advantages investing in the alternative investment. However, there are some disadvantages of investing in alternative investment as well. The first one, right? Investing in the alternative investment contain right, the drawback or the disadvantage here. They are more complex, right, than traditional investment. These investments are more volatile than traditional investment. Most of these alternatives are complex and often have higher risks than traditional investment. Most are relatively illiquid, meaning they are difficult to sell quickly. They often have a higher fee transactions, high fee associated with the return as well. Shall we move to here the example of the alternative investment? So you may have like a much more the overview or the outlook, the big picture of the investing in the alternative investment from the example of the alternative investment in the investment world. The first one, I would love to introduce you to know the invest in the real estate, invest in the commodities, invest in the hedge fund, invest in the private equity, as well invest the private debt. For the 5 things here in front of you on the slide number 19, that is the 4 example of the alternative investment that I would love to introduce you to have the idea. First one, right? First one, the real estate. Other word of the real estate, that is the property. What is the real estate? What is the properties here? Here, the first alternative investment which I would love to introduce you is the real estate or properties in front of you on the slide number 21, right? The real estate or property asset is the world's biggest real asset class. Individual investor like you, right? You are the individual investor, probably buy property such as office building, or might be residential apartment, or might be the condo as an investment. Investing in the real estate or the property contain, right, similar characteristic like a bond. What it is? Like a similar characteristic like a bond. Because in the property, right, in the property, if you are the property owner or the landlord of the property, as the property owner, you will earn, right, you earn current cash flow or current income from rental fee. If other people, right, if the customer hire the condominium, hire the office from you, you will get the return in terms of the rental fee, as might be monthly basis, quarterly basis, or yearly basis. Investor who don't want, however, right, if you are the investor, you probably don't want to be the landlord because might put your money into a real estate investment trust, as on the third bullet point, that REIT stand for Real Estate Investment Trust. We call REIT, we call REIT, right? We call REIT. A REIT manager, that is the kind of the fund manager. We probably call this guy as the property fund manager. We call REIT manager. Will invest the money in different property, manage and collect rent from those property. In terms of the property, it might be the property, it might be the office building, or it might be the residential apartment, or it might be some like a project of the condominium. That is the properties. The lead property, right? The lead manager or the property managers will manage and collect rent from this property, and you are the investor. You will earn, right, annual profit in form of the dividend, dividends, right, or a share in the property profit. Here, investing in the real estate requires a large investment amount. Shall we move to the second alternative investment, that is the commodity? What are the commodity? Here the commodity, right? The commodity, I would love to say that the commodity are also real, REAL, right? Real asset, and mostly like be the natural resources. What are the natural resources? For example, it might be agriculture product, wheat, corn, right? And as well, the natural resources, it might be oil, it might be natural gas, it might be precious metal like gold or silver. As well, it might be the industrial metal like copper or zinc. All here that I mentioned we call as the commodities. So the commodities here are considered a hedge against inflation. Additionally, the value of the commodity rise and fall with supply and demand in the market. For the commodity, the higher demand, right? The higher demand for commodity result in the higher price, and therefore investor will gain or will get the profit, right? However, investing in the commodity require a large amount of the investment as well, same as the real estate or the properties. Shall we move to the third one, the alternative investment, that is the hedge fund? What are hedge fund, right? Hedge fund here are the investment fund which employ various investing. I mean, a number of numerous investing strategy with the goal of earning high return on the investment. The hedge funds are managed by the fund managers who are specialized in the variety of the skill to execute their strategies, such as long-short equity, right? The market neutral, or like a volatility arbitrage and quantitative strategies. As well, the hedge funds are exclusive, available only to institutional investor. Again, I repeat again that for the hedge fund, like should appropriate and fit to the institutional investor. It might not appropriate or fit to the retail investor. Who are the institutional investor? I can mention that, for example, like a pension fund, mutual fund, high net worth client, or who are the individual investor who need to invest a large amount of the investment. So the investment, right, the investing in the hedge fund require a large amount of the investment as well. The fourth one, right, in terms of the alternative investment, I would love to introduce you to know, right, they have the idea of the private equity. What is the private equity here? The private equity is the broadest, right, category that refer to the capital investment made into private company or the private business, or the company or the business that are not yet listed on the public exchange, or I mean the public market, such as the stock exchange of Thailand, that is the public market, or such as the New York Stock Exchange, right, that is the public market. So there are several subset of the private equity. For example, here The venture capital, right? The venture capital, which help more like the mature company expand the business. An important part of the private equity is the relationship between the private equity companies and the business founder who receive the capital, right, the money. The private equity company often provide more than capital, right, to the business founder that the private equity company invest in. The private equity company, right, also provide benefit like industry expertise, right, like to suggest the sourcing, like sourcing assistant and mentorship to business founder. As well, for the last bullet point, investing in the private equity requires a large amount of the investment. Here we move to the last example of the alternative investment here. That is the private debt. What is private debt here? Okay, well, the private debt refer to the investment that are not financed by the bank, right? Such as the traditional bank loan and are not traded on any open or the public market. Then the private debt, right, is leveraged by company that need additional capital to grow their business. This company or this business that issue the capital that we call the private debt fund, and they typically make the money, right? They make the money in two ways, through the interest payment and the repayment of the initial loan. Investing in private debt is the complicated and require a large amount of the investment as well. You can notice that from the 5 alternative investment that I introduced you to know, right? For example, of the alternative investment that should be here. The first one that I introduced you, that is the real estate, right? Or the property. The second alternative investment, that is the commodities. As well for the number 3, that is the hedge fund, private equity, and private debt. As I mentioned, please notice that I mentioned that for the 5, right here, the 5 alternative investment, you need to, right? You need to invest, right? You are required to invest the big amount of the money. Then should, right, these 5 alternative investment here that I introduced to you that to fit to the that we call the institutional investor. So here that why I bring you, right? I introduced you to know, right, the type of the investor in the market. First one, institutional investor, right? Who are the institutional investor. And the second one, that is the retail investor. May I introduce you, right? The first one, that is the institutional investor. The institutional investor, right? That is the, for example, of the asset management company. Who are the asset management company? I think you should familiar with the asset management company who manage the mutual fund, right? Who manage the mutual fund. We call the asset management company or the fund manager as the institutional investor. As well, life insurance company and the non-life insurance company are example of the institutional investor. Listed company as the third bullet point, pension fund, high net worth investor, and ultra high net worth investor. Here from your left hand side, I show you the example of the institutional investor. You probably have the question, hey, Ajahn, where should write, where the student should be? You are in the part of the retail investor, right? On your right hand side, that is the retail investor. So in terms of the vehicle or the instrument to invest in the alternative investment, actually there are two, right? There are two two main vehicle. That is the first one, that is the private funds, and the second one should be the mutual fund. I think I sure that you have the idea what are the mutual fund, right? So please let me get back to the private fund. What is the private fund here, right? Private funds probably new, right, for you the student here. What is the private fund, right? The private fund, in terms of the private fund, right? The private fund are managed by asset management company, or the fund manager, right, will raise money from institutional investor. The asset management company then invest, right, the money from the institutional investor to alternative investment. For example, invest in the property asset such as office building, or invest in the commodity, or invest in the hedge fund, or invest in the private equity, as well invest in the private debt, etc. The investor, right, who invest in the private fund need to invest, right, a huge amount, a large amount. For example, the minimum, right, the minimum to invest or to set up a private fund, you probably need to have at least, right, the minimum fund size. You need to have the money. The minimum should be 1 million Thai baht, for example. The second vehicle on your right hand side, that I show you on your right hand side, the second vehicle investing in the alternative investment, that is the mutual funds, right? Mutual fund. As well, mutual funds managed by the asset management company or the fund manager, right? In terms of the mutual fund, the asset management company will raise the money from retail investor. So for example, right, you are the retail investor. When the asset management company, right, raise the money from the retail investor, they then invest in maybe both of the traditional asset, financial asset, or maybe the alternative investment. The retail investor who invest in the mutual fund, right, you can invest just like a small amount of the money. For example, just maybe 500 Thai baht, right? Not 1 million Thai baht. If you have only like a 500 Thai baht, you can invest in the mutual fund. You can invest in the mutual fund which invest in the alternative investment. Then we go to right here the detail of the private fund. On this slide, I show you the type of the investor who can invest in the private fund and the investment asset in the private fund. I will on the slide number 30, right? The slide number 30. I show you, right, the type of the investor who can invest in the mutual fund. That should be, right, the retail investor invest in the mutual fund and invest in the alternative investment. For example, the infrastructure fund, real estate or property fund, as well the commodity mutual funds. So this one, right, I provide you the example, right, the example of the mutual fund, which the retail investor like you can invest in the alternative investment, right? You can invest in the mutual fund, which invest in the infrastructure. Here, for example, right, the fund of the SCB, the Siam Commercial Bank Asset Management Company. This fund, right, this fund for the example one, that is the infrastructure fund. So for the infrastructure fund here, this mutual fund, right, this mutual fund invest in the digital. Please notice on the screen on the slide that this fund, right, invest in digital, right, invest in digital, invest in the telecommunication, and invest in the infrastructure. Here, that is the investment policy of the infrastructure fund of the SCB. On the slide number 32, right, on this slide, I provide you, right, this fund, the kind of the infrastructure fund, right, will provide, will pay the investor, right, in the form of the dividend. On your right hand side, please notice that for the here this fund pay the dividend for from 2022 to 2020, right? This fund pay dividend 34 times with the total dividend that is the 8.47 Thai baht. Then we move to the second example of the mutual fund that is the invest in the alternative investment, that is the real estate investment trust. We call this kind of fund of as the REIT. We call REIT, right? The REIT property. So the second example is the real estate investment trust of the Tisco Asset Management Company. We call REIT, right? This fund invests in the real estate in US. Please notice here that this fund, right? Tisco US REIT fund. This fund invest in the REIT, invest in the property in the US, right? In the US. So in terms of the REIT fund, right, for example of the Tisco US REIT fund, please notice the performance, right, of this fund for 6 months, 1 year, 3 years, and 5 years. Some certain period, the fund can contribute much more, right? Much more return, right? It might be like for example for the 3 months and 1 year, right? But for the 3 year and 5 year, reduce the return might like reduced. And here for the example number 3, that is the commodity. For example of the commodity here, I show you, right? I show you the example of the Tisco Gold Fund. Please notice here that the investment policy of the Tisco Gold Fund, that is invest right in the Spider Gold Trust, right? That is the master fund. In terms of the commodity, right? In terms of the commodity, that is the gold fund, for example, as the Tisco Gold Fund. Please notice the return for the 3 year and 5 year. In terms of the 3 year, about 8% is pretty much, right? Okay, move to the example number 4. Again, should be the commodity, but in this time, right? In this fund, right? For this fund, that is the Tisco Oil Fund. It means that if you invest in the Tisco Oil Fund, this mutual fund will invest in oil, right? DB, right? Dubai Oil Funds. So here, please notice, please notice for the performance of the Tisco Oil Fund for the 6 month, 1 year, 3 year, and 5 year. The last part, right, on this slide should be the key slide, that I would love to show you as the concept of the investing in the alternative investment, right? How to apply the concept of the correlation, right? Correlation between alternative investment and traditional investment to construct your portfolio model. Okay, here please notice here that from the slide, right? From the slide number 39, right? You notice that for the 1 year return of the Tisco Thai equity on the bottom, right? For 1 year, notice that for the 1 year return of the Tisco Thai equity, provide here 31%, right? 31% here, 1 year, 31%. Okay, why the Tisco Oil Fund? Why the Tisco Oil Fund here on the upper, right? For the 1 year as well, right? For the same term, 1 year performance. The Tisco Oil Fund, right, can provide the retail investor 81%, right? Okay, you can notice here that because the oil, that is the commodity, that is the alternative investment, the correlation, right? The correlation of the alternative investment, in particular of the oil fund, right? The correlation is not like a sounds like a negative correlation to the Thai equity fund. You can notice here that for the 1 year, the Thai equity fund can provide you 31%. At the same time, for the Tisco oil fund can provide the investor 81%. However, right, please notice here that during even you notice that oil funds, right, Tisco oil fund, the past performance is pretty good. But please notice here that for the 3 year, can you imagine like if you just like invest your 100% in the Tisco oil fund on that day, right, on that year, but for the 3 years, the Tisco oil fund bring you negative loss, right? Bring you negative loss. At the same time, please notice that for the Tisco Thai equity, still, right, still provide you some, right, some positive return. That is about like a 4.37%. That is the concept, right, that I strongly advise you to construct your portfolio with the traditional financial asset and the alternative investment as well, in order to first one, in order to enhance return, as well the key message, that is the diversification, right? Diversify your portfolio for the main purpose, that is first one, reduce the risks, and the second objective, that is the enhance the return. That's all, right, in part of the alternative investment that I would love to share you, that I would love to introduce you to know what are the alternative investment here. Thank you. See you.